In terms of inflation in our own businesses, it's extraordinary how much we've seen. The prices have just kept coming in higher. People have more money than they've had before. They like to buy. And there's certain things they can't buy. It's like during World War II, you had a lot of money created, and people couldn't buy cars, and they couldn't buy refrigerators, and they couldn't even buy as much sugar or coffee or things as they wanted. They had little stamps and gasoline and all kinds of things. Eventually, if you get a lot of money in people's hands and you don't have very many goods, prices go up. Now, you can do all kinds of things. The government has set out lots of money to people. And at some point, the money can't be worth as much as it was when there was less money out.
In today's video, we're going to talk about how inflation kills your wealth. Imagine putting $100 in a drawer and forgetting about it for 30 years. When you come back, the $100 is still there, but it can only buy about half of what it used to. Your money didn't disappear, but its value did. This is the hidden force called inflation. We're going to go on to the US Bureau of Labor Statistics and look at inflation percentages right now. Inflation is the change in the price of a basket of goods and services that are typically purchased by specific groups of households. Your money might look safe sitting in your bank account, but every single year it quietly loses value. Since 1913, the US dollar has lost over 97% of its purchasing power, which means if you had $100 back then, today it would buy $3 worth of goods. This invisible force is called inflation, and today we're going to break down how it slowly destroys wealth. When we look at Consumer Price Index, what we can see is food has gone up 2.9% over the last 12-month period. We can see that all items have increased by 2.4%. All items would include housing, it would include transport, it would include medical. What we can also see is energy has actually gone down by 0.1%. And aside from that, major categories, aside from food and energy, in total has gone up by about 2.5%. When you go shopping for food, you can certainly see that your basket that used to cost $100 to fill now does cost at least $105 or even more than that. When we look at inflation data, we can see every single year inflation does increase, which means our $100 this year cannot afford $100 worth of goods next year because the price of those goods has increased, even if it's only by 2.3% or 3%. When the CPI increases, say from 2000 to 2024, it increases by double the amount. That means inflation has gone up by an incredible amount and your purchasing power has halved, which means what you'd be able to buy for $150 in the year 2000, it would now cost $300 to afford the same amount of items in your grocery basket in 2024. This is why investing your cash is so important. When you look at cash versus investing after 30 years of inflation, if you have cash just sitting there year one and you just left your cash at home for 30 years, with the effect of inflation, you're going to lose about 58% of your value, of your purchasing power, which means if you lose 58% of your purchasing power of $10,000, in year 30, it would only be $4,200 worth of purchasing power. This is why it's so important that you invest your cash. If year one you invest your $10,000 into a growth stock and get an annual return of 8%, by year 30, you'll have made $100,000 off your investment. Inflation is what eats up your wealth over a long period of time if your money is not working for you. But if you have your money working for you and invest it into great companies, you can really get ahead in life and grow your money to substantial amounts. Investing is really one of the only ways that you can beat inflation. If you don't do anything with your money, you're going to lose money over time with your purchasing power to inflation. But if you invest your money, even if inflation eats up some of your investment, if you gain 8% per year for over 30 years, your money will grow to around $100,000 instead of losing 58% of your wealth by just leaving your cash at home. This is the difference between leaving cash at home and investing your cash. Thank you guys for watching today's video. Definitely it's worth investing your money rather than leaving cash at home dying to inflation. I look forward to seeing you guys in the next video.